Okay guys, let's crack on with the market briefing. Alistair Darling's likely to be continuing for quite some time yet, so let's crack on. So I'm recording this obviously, so if you want to listen to Darling now, then you can catch the recording of this later. So let's check out these charts. Obviously yesterday we had a move lower, and the biggest move lower since the Dubai saga first hit the news wires. Of course, that was on the 27th of November. So we were down around, around about 1.5% yesterday. And really, there were three issues that kind of fueled this sell-off. Firstly, the situation in Greece. Okay, so there's been speculation about the whether or not Greece is going to follow Dubai and begin to have problems financing any of its debt. And in light of this, some of the ratings agencies downgraded Greece on the back of this. So that this is a story that's been rumbling for the last couple of weeks, alongside the Dubai situation. And it's stories like this do create negative sentiment. They create nervousness, which creates negative sentiment. Okay, so further kind of chatter on this yesterday. Moody's coming in and downgrading Greek debt just fueled the nervousness around this story, and this is going to continue. Okay, we're going to continue to get updates and stories on this throughout the week, so be aware of that, and it does have an effect on market sentiment. Talking about Dubai, the second reason why we had downside kind of issues yesterday was further developments out of the Dubai saga, with one of Dubai World's property subsidiaries, which is called Nakheel, announced a loss of $3.65 billion. I'm not exactly sure the timescale on that. I'm presuming that's for the year, but I don't quote me on that. Okay, so they've announced a loss of $3.65 billion. On the face of it, that's not really surprising, given the problems they've had, given the fact that the Dubai property market has been the worst performing property market on the globe over the last 12 months. And actually, before the Dubai World sovereign debt default saga kicked in, before that, the Dubai property market was down 50% on the year. Okay, we still don't have numbers yet to see how much further the property market has dropped after these events, but obviously it's not going to be good for that property market. So we're assuming continued free fall, if you like, in the Dubai property market. So the fact that a property developer has lost $3.65 billion isn't surprising, but it's kind of piling on the misery, and it just escalates that story back onto the media. Of course, these headlines, these stories are going to grab the headlines, and again it creates nervousness and it damages market sentiment. The third reason for the sell-off yesterday was our Amplify Trading's favourite market commentator, Meredith Whitney, on CNBC, talking her own book as usual, and she was incredibly pessimistic, strongly pessimistic about prospects of recovery, global recovery and recovery in the States. She was talking about the fact that the US government was out of bullets in terms of ways it can prop up and help the economy. She highlighted the fact that the US consumers are in trouble, to say the least. And basically, I think, as far as from what I've heard, it was the most bearish commentary on the current economic situation that I've heard. And she's been notoriously bearish, and she has been short these markets for, it's got to be 3 months now, and it's getting painful for her. And ways she can alleviate some of that pain is to go on the TV and be aggressively bearish, and that's what happened yesterday. So not surprising. What does surprise me is the fact the markets still react to it. Everybody knows her view. So the fact she comes on TV and just expresses what everybody already knows, why the markets insist on responding to that is beyond me. But that's how markets behave. Okay. Again, it comes back to nervousness and negative sentiment, and sentiment is king in this market. And even though if you just step back, the market shouldn't really respond to her comments, given the fact the market already knows her stance. You kind of got to put that to the back of your mind, and you've got to say, right, markets do have a very short memory span. They do react to things when possibly your analysis of it suggests that the market shouldn't. And again, negative sentiment will always, add to downside momentum. So, and it just contributed to the other stories yesterday. So the Greece story, the Dubai story, the Meredith Whitney story, as a group of stories, provided the downside momentum. So, we got back below 1100. We didn't quite make it to our downside target, which was 1084.50. Okay, so we've avoided getting down to that point. The low from yesterday was at 1088.50. Okay, that was the low from overnight, really. What I've got on this chart, actually, let me zoom back a little bit. I've got a Fibonacci series, which is looking to be pretty good. Okay, so I've just zoomed back. So we've got the non-farm payrolls high there at 1119. That's on Friday last week. I've got a fib series looking at that high down to last night's low at 1088.50, and it's actually looking to be pretty good because these fib levels are actually backing up some other levels of support and resistance. So first of all, this morning the pivot level at 1095 coincided quite nicely with the 23.6% fib, and that had provided a really good area of resistance this morning. We did break through that at 1145, but prior to that, these two, the pivot and that fib level, had provided resistance on a number of occasions. We're through that now. We have found resistance at 1097.50. Okay, that was the highest retracement following the major sell-off yesterday afternoon. Okay, so that's quite a good level that's been confirmed this morning. Okay, so 1097.50 was the highest retracement of yesterday afternoon, and it's now the high of the day. Above there we got again a fib level, so the 38.2% fib level at 1125, coinciding with the level at 1100, which was the low from the sell-off on, let me get my day right, so on Monday evening. Okay, we had a Monday evening late sell-off that found support right on 1100. So this level's been backed up by the 38.2% fib. So that's a good level, right on 1100. Of course, 1100, well, it was a psychological level. That aspect of it has lost its strength, given the fact we've been above and below 1100 on numerous occasions now. So really, the psychological significance attached to that level is no longer there. Okay, so 1100, good level. Then we move up and we've got another fib level, the 61.8% fib. Well, first of all, the 50% fib's at 1103.75, but the 61.8% fib at 1107.25 coincides with yesterday's high. Okay, so these fib levels, quite a few of them are backed up by other levels, so it just adds strength to these levels. 1110.75 was the high of the week. Okay, set on Monday, and of course 1119 is our 14-month high, the non-farm payroll high. Also, actually, I forgot to mention, we're kind of through it now, but we are oscillating around it. The pivot level and this 23.6% fib level is also the lows following, around about the low following the aggressive sell-off off the back of dollar strength, following the much better than expected non-farm payrolls result on Friday. Okay, so some interesting levels for us on the upside. Okay, guys, these are all on the upside. So if we do get a retracement of the losses we've had in the last couple of days, then these are the levels we're looking at. Just looking at the euro dollar, It did hit a new 5-week low yesterday at 146.69 there or thereabouts. The one thing about that is it didn't quite get down to what is the major support level, which was the low on November the 3rd, and that's at 146.27. Okay, so that's a really significant support level. The market didn't quite get there yesterday, and overnight we've seen a drift higher. So maybe this downtrend that we've seen in euro dollar over the last 4 days is having, well, it's certainly had a